I dispute and I reject what you just said. Gold and silver have not been performing well at all. Not at all. They've been horrible, and they're still horrible. Because if you look at the valuation of gold and silver relative to stocks, if you just had a stock portfolio since 2011, so first of all, on a long term, since the 1970s, and also if you count since 2000, yes, gold and silver have both been performing better than stocks. Yeah, that's true. But they have not been performing well, and they're nowhere near, not even close to their tops relative to stock portfolios. If you have a guy and he just he has a 401k or whatever he has, and all he did was just invest in the S&P 500 ETF, and that's it, nothing else, just kept reinvesting in that, investing his profits into that, he'd have a lot more money than if you invested in gold since 2011. So no, gold has not been performing well at all. Neither has silver.
For years, critics have argued that gold and silver have lagged behind mainstream equities, pointing to the S&P 500's performance since 2011 as evidence. A simple stock portfolio that reinvests dividends has outpaced metals over the last decade, leading many to believe that gold and silver have failed as investments. Yet, history shows that currency collapses are slow-moving events, often taking decades to play out fully. The current decline can be traced back to 1933, when gold ownership was restricted in the United States, setting the stage for an inflationary system that has persisted for nearly a century. Now, in 2025, we may be approaching a breaking point where money loses credibility and tangible assets reclaim their importance. Rafi Farber, known as the endgame investor, emphasizes that gold and silver are not merely speculative assets, but tools of survival in a collapsing currency system. Gold offers long-term stability of purchasing power, while silver provides liquidity in day-to-day exchange when traditional money fails. Together, they form a dual strategy for weathering financial upheaval. Now, we present the clips from Rafi Farber's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Currency collapses do take a long time. This one has been starting since 1933, and what are we now? 2025, so we're like 92 years into it. It started in 1933 because that's when Roosevelt made it illegal for his citizens in the U.S. to own money, and he said, "You can only have my credit now, and I'll take the money." And that gave them that gave the central bank carte blanche to inflate the credit supply as much as it wanted, because without people being able to redeem their credit for money, they could control the inflationary system. And now we're year 92. So yes, currency collapses can take a very long time, as this one has. The question is, how much longer can it take? I think more than a few days. Do I think more than a few months? No, I think we're at the end. I dispute and I reject what you just said. Gold and silver have not been performing well at all. Not at all. They've been horrible, and they're still horrible. Because if you look at the valuation of gold and silver relative to stocks, if you just had a stock portfolio since 2011, so first of all, on a long term, since the 1970s, and also if you count since 2000, yes, gold and silver have both been performing better than stocks. Yeah, that's true. But they have not been performing well, and they're nowhere near, not even close to their tops relative to stock portfolios. If you have a guy and he just he has a 401k or whatever he has, and all he did was just invest in the S&P 500 ETF, and that's it, nothing else, just kept reinvesting in that, investing his profits into that, he'd have a lot more money than if you invested in gold since 2011. So no, gold has not been performing well at all. Neither has silver. If you look at silver relative to the S&P 500, it's almost nothing compared to what it was in the 1970s. So silver has not been performing well. So if you look at the dollar number, yeah, it looks like it. But if you're gonna compare it to someone who has been investing in mainstream stocks for the last 15 years, it's been doing horribly. So I expect that to change very quickly. And once we see that gold and silver holders, those who have physical gold and silver tucked away somewhere and they don't have any stocks, once they can say they have more purchasing power than someone who's been reinvesting his dividends and his excess income into the S&P 500 for the past 15 years, once gold and silver holders say, you know what, we have all the purchasing power. You, the guy who has the S&P 500 or the Nasdaq or whatever, you've lost it all, and that'll be the end. So if that's what I expect to happen. So is there still time to own gold and silver and to participate in the rally? It's not really a rally, it's just a sucking of purchasing power away from mainstream stocks into money because of the death of credit. Yeah, there's time, not much, but there's time. So yes, there is industrial demand for silver, and back when it was the money directly, and that people used it as money, like but prior to 1873, when the dollar was taken off the silver standard, there was basically almost no industrial demand for silver at all. So in today's environment, we're talking about there is an industrial demand for silver, and but there is no direct monetary demand for it right now. But when the monetary demand does reintroduce itself, there's still going to be that industrial demand that is on the side. So it's going to take some of the current silver supply and direct it into industry, so there will be less ounces, fewer ounces to use as money directly when that is required, which will only increase its purchasing power. I don't know by how much because I'm not an expert in how much industry it requires silver, and if we're in a monetary collapse, how much of that industry is even going to be functional? I suspect not much of it in the immediate aftermath of the collapse, but as a credit system is rebuilt, I would expect that a lot of that silver is going to go back into industrial demand and less of it will be available for monetary demand, which will help steady, I think, the purchasing power of silver. We saw in previous collapses, let's say 1980 when silver hit $50, almost immediately went back down. This time, I think it will hit a peak and then it will gradually fall back down to some equilibrium level that will be less than the peak. But because of the industrial demand that will be reintroduced as the monetary system picks up again and we reintroduce an honest credit system, I think the fall of silver, which I do think will happen after a peak, will be a lot less pronounced than it was in 1980 or 1919 or those other years. The reason for holding silver is very similar to the reason for holding gold, but it's slightly different. I'm pulling up a chart here that I can use to supplement what I'm saying. Hold on. So the reason to own silver is to get through the end of the currency system. That there's going to be a time when credit doesn't work, when you can't buy anything with dollars. You're going to have some of a liquid commodity to use in order to get through it, because otherwise you'll have to, let's say, if you only have furniture and real estate, then you'll have to, I don't know, sell your house for, I don't know, 3-4 weeks worth of food. That's not a good deal. Instead, you'll want something more liquid that you can buy a month's worth of food and you still have a house. That would be better. You'd survive, but you wouldn't have a house. So I don't really look at industrial demand other than for silver. Actually, before we get to that, you asked the difference between owning silver and gold. The point of owning gold is to stabilize your purchasing power, but you're not going to be able to go around when the dollar doesn't work. And when the dollar doesn't work, no currency is going to work because all currencies are based on the dollar. This is just a mathematical fact, because in the basements of all of the central banks, all the foreign central banks that issue other currencies, they are backed by US dollars. The foreign central bank, for example, of Israel, where I live, is the central bank owns dollars. And with those dollars, it prints shekels. And they try to balance that exchange rate between the dollar and the shekel. So they try to follow the Fed's monetary policy, print within certain ranges so that the exchange rate doesn't get too fakakta, messed up. And same with other countries. The Ukrainian, is it the hryvnia in Ukraine or something? Yeah. They do the same thing. So all other foreign central banks have dollars and they try to keep their currencies within certain exchange rates. And the only reason they don't is because they're experiencing their own crack up booms and they can't resist printing too much, because otherwise their own banking systems will collapse. So they just go with hyperinflation instead. And so when that happens to the dollar, all the other currencies collapse with it. The point of gold is to stabilize purchasing power. You're not going to be able to go around with gold ounce or even half an ounce and buy retail amounts of stuff. You want silver for that. And that's where the purchasing power is going to be. So if you want to stabilize your purchasing power, you want gold just to sleep well at night. And you also want enough silver to actually get through the worst of the chaos so that you have liquidity to spend on retail amounts of stuff, so you don't have to sell a luxury car for, a few loaves of bread.
The reality of today's financial system is that it is built entirely on credit. Every dollar in existence originates from debt, making the currency itself nothing more than a claim on future promises. When the system begins to unravel, holding dollars or any other form of credit offers no real protection. True security lies in money, defined not as paper, bonds, but as the most liquid physical commodity that holds value over time. Precious metals, particularly gold and silver, meet this definition because they remain stable, divisible, and universally recognized. In times of collapse, valuations of stocks or bonds become illusions, distorted by a failing measuring stick, the dollar. Once that stick breaks, assets will be repriced in terms of real money. Those who already hold physical metals will find themselves positioned to acquire capital when everything resets. Let's get back to the interview.
I'm not interested in investing in anything. I'm interested in divesting because I see everything is about to collapse. By divesting, I mean getting out of all debt, right? And the dollar itself is an instrument of debt because all dollars that are issued that exist today were brought into existence in exchange for treasury bonds that the Federal Reserve bought. So the dollar is debt. And therefore, to invest in dollars, to hold dollar cash, is to invest in the system. And if the system's going to fall, then you're going to have to get out of all credit, which includes the U.S. dollar, and get back into money. And the question is, what is money? And people have been so polluted onto as to what even money is that nobody knows what it is anymore. And people think that money is stocks. People think that money is debt. People think that money is bonds. Worse, people think that money is nothing. It's just a point system, or that it's Bitcoin, a series of numbers in a chart that for some reason people think have value, but they don't realize that everything is connected to the past and all prices are connected to the past. So the simplest definition of money is the most liquid physical commodity that exists in an economic system. And because it's liquid, you use it to trade for other things. Because the reason that it's liquid is that it stays in the same form, and that its value changes the slowest versus everything else. That's what makes it liquid. That's what liquidity is. So money is liquidity, and the most liquid thing is the best money. So what I am telling my followers is get out of credit and get into money, which means precious metals that you can actually have access to, and not credit derivatives of precious metals, which I'm not against entirely. I own some credit derivatives of precious metals, like ETFs. I own some of that, but in the end, I don't think those will survive either. They are good vehicles through which you can earn more credit through using them, and then use that credit to get money if you want to play that game. But ultimately, you have to get out of all of it. And then once it all falls, then you can redeploy your money back into a credit system that will grow on top of it, but a more honest one that isn't so inflated with a bunch of garbage that we have now. I expect that valuations will go up and down more and more in a more and more volatile way, because the unit on which they are counted and valued, which is the US dollar, is getting more and more shaky. So you'll see crazier and crazier rallies followed by crazier and crazier sell-offs, and this will get more and more volatile until the very unit with which we measure these things collapses entirely. So when you ask me about the valuations of stocks, my answer is nobody knows what the valuations of stocks are, because the measuring stick that we use to value them is sick, right? If you're gonna tell me how far is it from my house to the nearest supermarket, and then you give me as a measuring stick something that keeps wildly changing, shrinking and growing, like, wildly every second, I won't be able to tell you how far it is from my house to the supermarket. So any answer I give you won't make any sense, because it can change the next day based on my measuring stick. All right, so there are no valuations of stocks. They're all an illusion. Everything is an illusion. Nothing makes any sense, and this is all going to hell. When a treasury is a vehicle to pay future dollars in dollar terms based on a dollar that's already existing because it bought a treasury. So you're talking about a self-reinforcing loop. The treasuries are units to pay future dollars, which themselves are treasuries, which themselves are dollars, which themselves are treasuries, and so on and so forth, until the whole thing spirals out of control. So should interest rates be higher or lower? I know that these aren't like the answers that you wanted. You wanted me to give, a number, what interest rates should be. Well, I mean, we could play that game. Let's say if interest rates are, let's say, 20%, what would that do? That would collapse the banking system. Well, if interest rates are 0%, what would that do? That would collapse the dollar. So it's one of those two. One of those two is going to happen. It's not going to be collapsing the banking system, because then the bankers will get very upset. Instead, it will collapse the currency, and that will collapse the bankers, because when the bankers have no more dollars and their dollar can't buy anything, and they have banks full of dollars, they have nothing, and then they'll collapse anyway. End of this, no matter where interest rates go, higher or lower, means the banking system is going to collapse. And when the banking system collapses, that means everything is reset. All valuations of everything will be reset to money and not to credit. And the question is, who will have the money? And the answer is whoever has the gold and silver. They will be able to use their liquidity to acquire whatever capital remains, and everything will be redistributed based on who has the money and not who has the credit, because the credit will be worthless. Don't invest in anything. Don't even think about investing. There's no point in investing. Everything is so inflated that no numbers make any sense. So whatever you earn, put 10, 15%, 20%, whatever you're able to into physical gold and silver, put it in a vault somewhere, have some with you, have some not with you. Split it up. Don't put it all in one place, and just do it a little bit at a time, a few ounces at a time. Start with silver. If you have extra money, then get some gold. Once you have, a nice amount of that, then relax and keep stacking little by little. And then once you have enough bullion, let's say I would say something like $15,000 in today's money per person to get through the end game. That's just a rough estimate. Then you could think about some mining stocks, and you'll want to own those as directly as possible. If you can avoid a brokerage, then avoid a brokerage. Sometimes that's very difficult to do. If there's going to be a great taking, it will be a brokerage focused event, meaning your brokerage might go out of business and then you won't have any access to your stocks. I don't think it's going to be a government confiscation thing, but start with silver bullion, move there to a little bit of gold bullion, store some of it at home, some of it away from you, not in a bank. And then if you have any extra money, then I would start looking into gold and silver mining stocks. So I was always tending towards that conclusion, but at some point, I think in 2021 or 2022 even, somewhere around there, it slipped that not only is gold and silver, was it money and everything was based on it, but I'm saying the day I realized that right now, gold and silver are money right now as I am talking to you, and that everything, all valuations are ultimately based on gold and silver ounces. It's just that the dollar is a substitute for it. Once I understood that everything goes back in time, I was able to calm myself because I always had doubts, like especially when the gold and silver were falling in 2014, 2015. It was very difficult, but I was still holding on, but I was still very nervous. But now, ever since I understood that, the price movements have no effect on me at all. Because I understand that if gold and silver are money right now and everything else is just a substitute for it, built on top of it, then the top is going to go away, and then all the current goods and services that exist will only be exchangeable for the money itself. Once you understand that reality, nothing can really budge you from it because of Mises's regression principle. Mises is the economist in that book back there, and he basically said prices are not arbitrary numbers. They tell you real things about the world. They tell you how much of a commodity or how much of a good or service is available versus how much people want it. And then in order to divide that good and service among all the people who want it, there's a price. And that clears the buyers and the sellers at that point. This is real economic information. Now, so you can't just assign a number, invent a currency system, and then just assign random numbers to all the goods and services in the world, because then you just create a train wreck of goods and services, which means massive starvation because they cannot be distributed because the numbers make no sense based on any economic reality of actual supply and demand. What you can have is you can have an inflationary system that gradually warps the amount of demand or warps the measurement of demand for any good or service, which is what we call inflating the dollar supply. So it becomes that yardstick that grows and shrinks and you can't tell a real number. You can sort of get it, which is why our system still sort of works and people aren't starving in mass. But at some point it snaps, and then you go back to something that's very, very much unlike what everyone experienced the day before, the few weeks before, and that's when everything gets reorganized. And that's when you do have some starvation, especially for the people that have no way of parsing goods and services with any liquid commodity that is available to them. So that's what's going to happen. And once I understood that, I never second guessed after that any of my strategy, and whatever the dollar numbers for gold and silver are, it really makes no difference to me at all, because I know this is the end game, and I'm waiting for it anxiously.
The story unfolding before us is no longer just about daily market fluctuations. It's about a system shifting beneath the surface. The signals are undeniable. Global institutions, sovereign players, and commercial banks are repositioning themselves for a world where the dollar no longer holds the same dominance it once did. Gold, silver, and other neutral reserve assets are quietly being accumulated because trust in U.S. Treasuries as collateral has been shaken. What's critical to understand is that these moves are not about speculation, they are about survival. Nations and investors alike are preparing for a new settlement framework, one less dependent on dollar liquidity and more grounded in tangible assets. The accumulation we're seeing today suggests that the architecture of global finance may soon look very different. When that inflection point comes, those who have already positioned themselves in real money will have the advantage. This isn't just about protecting wealth, it's about being part of the reset that's already underway. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.